All right, how's it going, everyone? Richard here, and welcome to the Friday edition of the Morning Bell. Right, we just had the US job numbers released at 8:30 a.m. EST. What's 15 minutes ago? And they're all green, better than forecasted. 263,000 jobs added versus 248 forecasted. We've also seen the unemployment rate drop by 0.1%. So like I've been saying before, the markets, or I'm going to say market participants, probably wanted to see slightly worse figures, because this will then likely have the Fed sort of decide whether they should reduce interest rate hikes next time. Well, that didn't happen. I've really seen a pretty decent bounce for the ES and NQ. Then again, we'll have to see during today's session and by Monday when we do our next morning bell where things and prices stand. By the way, I might apologize that there might be some drilling going on about here. They are working on the distribution board. There's some issues here with some electricity, but at least everything is working well at the moment. And also, as always, guys, if you've got any questions, please let me know there in the chat box. I'll be more than happy to answer them for you. All right, let's get right to it. Cool. DES. Sort of hovering around about the 3,751-ish level. And this was just prior to those job numbers. And now price is moving lower. Getting close to testing this lower or center median line, of where price previously bounced from in June. So this might act as support. We also mentioned that, I mentioned that we potentially had this expanding triangle. Let's have a look at the 4-hour chart that either ended here, and now we're seeing a bounce to the upside that could maybe even move higher, or it ended here, meaning that we could potentially get another move lower into this support zone that we have the lower side here, with the upper limit round about, I need to change this, right where this low red warning line is. Price previously just missed it, so it'd be nice to see what happens if price makes contact with that. So I think we do get a break below these levels at that center median line. And let me just mark that out. And this low 50% dash median line, this one we have over here. Then, and a close on a daily potentially. There's probably good probability that we'll see the market move into this lower red warning line. But that being said, you always have an expectation of what market participants might do. But like I said before, if these numbers were good, then potentially you're going to see another decline. But a bounce from here, price might find support and even head higher. That was the expectation a while back. Let me just go back to the daily again. There we go. That we might see some sort of a similar move like we've seen previously here, where prices break below a previous low, and then you get like here, for example, breaks a previous low, sharp reversal. Price breaks a previous low, sharp reversal. The question now is, and it's always in the back of your mind when you work market geometry techniques, that if price did not make contact with either one of your market geometry lines, in this case this low red warning line, whether that move to the upside is actually going to be sustainable or not. But in any case, we did think that it's going to be a breakout to the upside. Price didn't make contact with this low median line that's been sloping downwards. It's been sort of used to figure out where support and resistance might come in during this incline that started, or decline that started in January. So yeah, I still think that if we get a sustained break below here, perhaps close below it on the daily time frame, that there's a good chance that price will test these areas. Otherwise, another move back to the upside. And again, I should just go back to the 4-hour quick. could potentially mean that this was the first move to the upside, and that we now are getting some sort of a corrective move, maybe a zigzag, maybe even deeper, whatever the case might be, and then get a partner leg that might mimic this move to the upside. So all of these previous reversals to the upside have been pretty sharp. So a break above this low median line, 3,832 is actually should be updated. Yes, plus minus on today's candle. And we might see a move into this low median line, dash median line, and again that center median line that's a little bit higher up, expecting a much higher bounce if that does occur, similar to what happened previously, and then all of a sudden you just get a very sharp reversal back to the downside. And why I do say that is I still think that the downside potential is still pretty large on this market, same with the NQ, i.e. that this is potentially still an incomplete Y wave or the second ABC move of a double zigzag. Alright, so that is still a possibility, and any relief rally or that we get, and I mean this has not really been a relief rally in any sort of sense, it's been pretty shallow. I would like to see a much higher move and still expect that we could at some stage reverse lower and then come into this Y wave and the zone we identified previously on the downside, to then potentially end a corrective move. Let's just quickly look at the weekly just to give you a bigger perspective. I'm still viewing this as corrective, although it looks very nasty. That might still correct another decent portion of this move to the upside that we see. Price only reached the 38.2%. I know there's a lot of lines on here, but bear with me. Maybe I'll just delete them a little bit quickly. Reacted. It just fell short. Well, not really fell short. It's quite still distance away of the 50% retracement. And then we have that 61.8 retracement, which is typically areas we've been using for retracement levels where corrections end. Now, obviously, you want to see what the pattern looks like. Use a market geometry to identify areas where there's confluence, and then expect potentially support to step in there. So this has really been absolutely nothing in the bigger scheme of things. I mean, only hit the 38.2. We'll broke below it a little bit now again. Sorry guys, I just want to take a quick sip of water here. So in the bigger scheme of things, this is just a blip on the radar, in my opinion, in this case the markets. So although the price might move lower, it might still look like it's the end of the world to many. I don't think it's really moved deep enough to really tell me that, you know, this is potentially, you know, a start of a much deeper move. So I'm still seeing this as a corrective wave. That's pretty much all I want to say. And those were your levels I just showed you on the daily. That price would need to overcome to the upside, and always with the thought in the back of my head that if price does break below here, that we'll still see a test of this and then potentially get that higher bounce that we've been waiting for. So very important to keep these levels in mind and then trade from them, or be careful not to trade into them. Is quite often what many traders do. They're unaware of these larger levels. They're very, very important levels on bigger time frames, and then all of a sudden out of the blue you find support or resistance depending on which direction you're trading, and then wonder why you get a reversal. Alright, so that's enough of the ES. Let's quickly look at the NQ. There we go. And the NQ is going to give me hassles again today. Still can't figure out why on dear earth does the NQ give me so much hassles when I try to analyze it. Got a very strong PC and a very fast internet connection, so yeah, even NinjaTrader support couldn't answer that question. But in any case, let me just get rid of that line over there, this line over here. Right, so we were saying that price might potentially move into this line over here that we have. It runs parallel with one of these median lines, this purple one over here, and look where it found resistance. Also a bit of an area where we have the low median line of a pitchfork that also slopes down, similar to the ES. Gosh, it's very jaggedy, isn't it? That we've used that also worked exceptionally well in helping us analyze where the market might find support. In this case, also in that June window, strong move to the upside. And now we've had a break below that area, a move back into it, and now a rejection from it. So here too, price has not reached the lower red warning line again, so you beg the question whether, and especially after today's job numbers that were pretty decent, whether we'll first see a return lower to break these lows that was set on the 3rd of October and then drive prices even lower towards 10,581 to 10,306 level, plus minus, which again then falls here within this lower red warning line. Otherwise, price finds support and similar to the ES and rises above these previous highs, then I'm going to work on the assumption that we're getting that bounce high that we've been expecting for a while. Again, this is just a blip on the radar at the moment. Things could go much higher, but it certainly doesn't look like it today. Markets are really reacting negatively to this news. All right, let's have a quick look at crude oil. Get away from NQ because it just bogs up my PC for some reason. All right, crude oil on the other hand, a nice little bam, way up. No issues breaking in this previous areas where we had lows and lows and lows that I said might act resistance. Now that didn't happen. I'm going to remove that now. Bear in mind, I've been saying for a while that potentially seeing a leading diagonal that might end within the zone. And remember, we had this little zone on our charts way before price reached it. Again, a confidence area between an upward sloping channel line, and in this case also a lower median line of a pitchfork. Now I like using shift pitchforks. This is what the setting is when I believe I'm dealing with a corrective move, or even if you think you're dealing with a market that's trending but the angle of the trend is not too strong. Especially when you're seeing there's a lot of zigzagging side of moves, then a shift pitchfork's generally a good setting to use. And simply rule of thumb, you'll just draw a shift pitchfork using the 3 anchor points, prominent anchor points prior to a decline or incline, depending on what direction you're doing your analysis from. Then in combination with pattern analysis, I was saying that we potentially have been seeing, or we might have seen, the end of a 5-wave move into that area, which is typically how patterns behave. And also then using market geometry, quite often you can get very strong areas from where price reacts from. So again, if you're new to the service, just quickly, and you guys have been following me for a while, probably sick and tired of me saying this, I wasn't viewing this as an ending diagonal simply because of the shape of this move to the upside. Now, I did view this as a 1, a 2, a 3, a 4, and a potential 5 wave. But not as an ending diagonal, but more mimicking the shape. Oops, why did that? No, just hang on 1 second. Of a leading diagonal, something like that. If this is the case, and obviously I'm getting more confident that this was the end of a 5th wave, then I would expect crude oil to retrace a decent part of this move to the downside. And what might that look like? We use a FIB retracement. We haven't even seen price hit the 38.2 yet. So that currently lies around about 91.93. So that's definitely an area I think crude oil can move into. And slightly above that, we also have the center channel line, which previously, and for a very long time now, has been working well with regards to support and resistance. Now that line currently lies above today's price at around 93.15. So it gives you a, let me just get that right, an area where price might move into and potentially find resistance. But this move has been pretty strong, and one would also expect, if this was a leading diagonal 5 wave to the upside, that you could potentially get one leg higher, get a retracement, get another move back to the upside, maybe even tracing as high as a 50% or 61.8%, and then get a strong move down to the downside. Now, this could obviously take quite some time to materialize. Obviously, we'll only know after the fact, but that is my expectations. And obviously, you have to work a formulated plan with expectations and then work around that and implement your strategies, right? So we do get a, let's say, a decline today, then potentially we could find support at this low 50% dash median line of about 87.30. But I do think that this is a really good target area. 93.20 to the upside, maybe even higher. It's not unusual for price to overshoot or undershoot these market geometry lines. Let's make it a little bit wider. And why did I delete that lower line? It was the line that was lying around about the 38.2 retracement of this move to the downside. So that creates a zone, again, roughly 93.50-ish, 91.76 to the downside, that we could potentially see resistance. Again, very strong move to the upside. So at some stage, maybe we're going to see a 1, 2, a 3, potentially a 4 and a 5 for potentially an A wave, because the A wave, should I say, of an ABC, which is your most common corrective pattern, and then get something like that. But we'll deal with that as time passes. Have a look at price again on Monday and then see where things are trading. But again, price has been drawn for the longest period of time towards these lines regularly and reacting from them to a very high degree. So I think it's safe to assume that prices could be drawn towards them again and again find, in this case, potential resistance at these areas. All right. Gold. Yeah, so gold's been another market that's been following this downwards projection of this pitchfork. Again, a shift pitchfork, extremely well. You know, we had support at this low 50% dash. We had resistance at the centimeter line, a little bit of an overthrow. And quite often you get an overthrow or underthrow, depending on the direction you're trading. You can run a line that runs parallel to one of your median lines. And quite often if you get an overthrow again, and like in this case over here, it will typically overthrow it by the same amount. It's pretty incredible to see that, and it happens very, very often. Now, we've been saying that we might get an overthrow or we might get resistance, and we had to update this line, obviously. Look at how price has been struggling to get through the center median line, around about 1,736-ish. It's already reacted lower. Now it's again bouncing from this median line. Previously there was a bit of resistance there. So same thing here. Sort of stuck in between that level, 1,736, a break above there. Might just take price back to this area where it's been overthrown previously, and then we see a move to the downside. Or this was it, and that's the end of gold's decline, and we're going to see another move to the upside. A very strong move to the upside that might even go to new highs. But before I get to the dollar index and conclude today's session, I just quickly want to bring back that previous idea of what I think this entire mess has been since this high that came in August 2020. I was saying that we're potentially dealing with an A, a B, a C, i.e. an expanded flat. Now when you move into an high, I think that this was potentially a wave 3 in a larger degree, that you'll get some sort of an A, B, C. I'll use the other tool, that one still irritates me sometimes. A, B, C, a 3-wave move. And you get a 3-wave move moving backwards that either tests the high or just sort of terminates below the previous high. And then you get a C wave that runs in 5 waves. Come on. Why is this not stopping? Something like that. A very messy sort of drawing. I hope you can see that. So yeah, I do think there was a combination of a 3-wave. Here, a combination of a 3-wave, giving us an A, a B, and then we expected a clear 5-wave move to the downside. Now, I think we've all been thrown a curveball because we had a beautiful 5-wave decline. 1, 2, 3, 4, and then this 5th wave over here. And at that stage, we said, okay, cool. And it's also where price reached a low median line again of a pitchfork. Confluence area, low red warning line sloping downwards, and we had a strong move to the upside. Now things have changed on account here because we made another move to the downside instead. Price failed to find support here and obviously move higher. This we know now clearly. But instead now we have a 1, 2, 3, 4, 5, 6, 7. And that doesn't fit the look and shape and feel of that 5th wave or 5 waves that you should see in a C wave of expanding triangle. So the only thing, expanded flat, not a triangle. The only thing that I think might be happening here is that we're still busy with a 5th wave decline. And quite often and I'll label this for you. Where's my tool now again? Hopefully it works all right. Now let's use this one. That your 3rd waves in commodities, you'll see this quite often in gold and crude oil, can very often be shorter than a 5th wave, meaning that we could still be seeing a very long extended 5th wave to downside, and that the 3rd wave, where we thought things might end, might have ended already. So if this is a 1, 2, a 3, then this begs the question, what is this? And I think the only shape that you could really figure out there is this. This was the 1st wave of the 5th, 2nd wave of 5th, 3rd wave of the 5th, 4th wave of the 5th, and then another 5th wave to the downside to complete the pattern. And let me just show you that. 1, 2, 3, 4, 1 wave more lower required. And thereby potentially tracing out as an ending diagonal. Again, I do apologize for all these lines, but if you've been watching these sessions for a while, then hopefully you understand what I'm talking about here. All right, so potentially, let me just maybe hide that. Seeing something like this, where this was a 1, a 2, a 3, a short 3, a 4, and now you're getting this extended 5th wave to downside. So price that hit those areas that we've seen and labeled and used or determined, should I say, from the market geometry pitchforks that's been sloping to the downside. And it is reacting lower. So a break below, where's this level now? Around about 1,689-ish, or even lower and close below there. Then I think we stand a decent chance of seeing that final move to the downside before more upside follows, or potentially, I don't know, even a bounce. Maybe this crazy correction isn't over yet. It's been extremely messy, but that is my expectations. And that's the only sort of way that I can fit in 5 waves to the downside, is by thinking that we're not done going down yet. All right, and before we conclude things, quick look at the dollar index. We've been looking at this area where price basically touched an upper channel line to the T, and this is now on the weekly, and we've seen a strong reversal back to the downside. Now we also have this up median line here, and this is a good example of where price doesn't reach one of these extremes that you'll typically expect a reversal from, that you could potentially just see a corrective move and then see price meet those lines at a later stage. So price moved into, undershot this low, this upper 50% dash median line, this green line, and it's now pulling back to the upside. So I still think that might be the first drop. We might be seeing something like this. But again, fears are always now these days with the interest rates, right? These good numbers that came out, doesn't look like the job market's been softening as much as most people would have thought, and that the fears still persist that the Fed will aggressively continue with the interest rate hikes. So who knows, maybe we still hit that area, but we've thus far seen a reaction to the downside from it. So again, we'll look at the dollar index again on Monday, as well as all the other markets that we follow during these sessions. Alright guys, and that concludes today's session. If there are any questions, and again, as always, let me know and I'll be happy to answer them. Otherwise, I hope you have a fantastic rest of your weekend. Take it easy out there, and as always, I'll be back again on Monday. Right, let's end things there. Thanks very much for watching, guys, and take care that side, and goodbye.